NASA launch.
Good morning. Welcome back to NASDAQ Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at NASDAQ's booth 427 for the 34th Annual Futures and Options Expo. We have Derek Urben. He's the CFO and Director of Business Development over at Coinigy. We're going to focus on token market structure. That seems to be a really hot topic, not only at FIA, but just about anyone you talk to these days. Obviously, it's very different than your more complex, evolved market structures like equities and bonds. Tell us about what you're seeing in token market structure.
So it's a constant changing thing, whether it be regulation or just structure in general. It's very fragmented right now, really siloed is probably the best word I could use for it. So you look around here, all the exchanges here, they're all connected in like EMS, OMS stuff, ECNs. Within crypto, it's very siloed. Each exchange, you can only trade there. You can't trade across all of them. Coinigy, kind of with ourselves, we kind of create kind of landscape with 3 APIs and everything, which are still kind of in their infancy, to connect all of the exchanges, whether it be data, portfolio balances across everything, or trading as well. How that's going to change is going to be interesting. I think it's going to be kind of a function of the technology coming in and then also the regulation coming in.
Right.
When you have like global best bid and offer coming in, if that's going to actually apply to crypto, we don't know yet. And in the technology space, I mean, it's just going to drive innovation to have more connectivity across because it makes traders, exchanges, all lives easier.
Do you think that's really where the challenge is in terms of institutional adoption is because of that fragmentation and custodialship and so forth? Those seems to be the 2 biggest concerns when it comes to that.
Yeah, so the custodianship thing is interesting. That was kind of the first half of 2018. Everybody was saying that's the big step that has to happen. You have Fidelity coming out yesterday or the day before. That was probably the best step that could have happened.
Right.
You have all the other custody providers like BitGo, KTC, all the ones out there. They're doing well. I think the price pullback has been a little hesitation for them because they really care about assets under management. They just got to push that number forward. In terms of the actual making it easier for institutional guys in terms of connectivity, unfortunately, there's some institutions that can't move into the space because there's just not an exchange big enough to handle them.
Right.
When you're pushing maybe $30 billion a day across all crypto, if you have a big bank coming in or a big prop shop, they can only do so much with the P&L. So I think the connectivity across, whether it be Coinigy for the kind of the retail side, since that's kind of our bread and butter, or some of the more institutional focused connectivity platforms are definitely big things.
And that's where the difference is. So we have our exchanges, we have our broker dealers, we understand where the assets are being kept. Now, from my understanding, when you're trading digital assets, everything's being done on one platform. It's the exchange, it's the broker dealer, and is that kind of where the disconnect is?
Yeah, so there really isn't like a broker dealer kind of aspect, right. And there's not really an exchange
that would be like
aspect.
Your wallet.
Yep. So there's no such thing as a broker in crypto.
Right.
They connect to the exchanges, they hold your funds, and within crypto, you call like Binance or Ponyx an exchange.
Right.
But they're really not an exchange, rather, because they actually hold the funds and they exchange the funds and they transfer the funds and all that. So it all kind of wrapped into one, which you could argue is better for efficiency if you do it all in one kind of under one umbrella. But again, they've never done this before. So.
Right. In 5 to 10 years from now, what do you think or what do you hope it will look like for digital asset trading?
So there's kind of a constant push of like we need to institutionalize and Wall Street eyes this whole space. There's kind of the original Bitcoin adopters that are like, we don't want that. We don't want the ETF. That might not be the answer at all. I mean, we might have to change how like financial structure looks in general. My personal opinion is probably that would be good. I mean, a little innovation doesn't hurt. In terms of going back to like the things that have been happening the last 100 years within the equity markets, if crypto can kind of disrupt some of that and change for the better. I hope that's going to happen in 5 years. But that said, the incumbents have a lot different opinions than that. They kind of like the way of life. I don't want to see it changing. So.
All right, well, let's see where it goes. Thank you so much for joining us at the NASDAQ booth, and thank you for joining me throughout the day. We're coming to you live from the 34th Annual Futures